year's edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. This is the Markets Club podcast with Matt Bennett from agmarkets.net. We were talking about the fundamentals with Matt. And then I'm with Sue Martin from Ag and Investment and Angie Seltzer from Conus Ag. We're discussing with Sue about the grains and crop condition. I will be asking about the fundamentals from trade for Sue and Angie. This is the Markets Club podcast with Cesar Delgado. I'm joining with Matt Bennett from agmarkets.net. We were talking about the fundamentals with the weather in central Illinois. However, there are many things in the grains markets. We were talking about it with Matt. Matt, how are you?
I'm doing good. Our crop looks really good right here where I'm at in Shelby and Moultrie counties. To be honest, we've had all the rainfall we need. We had a dry June, a pretty good planting window. Planted beans in April and May and planted all the corn in May. Looks really good. So the crops look good right now.
Great to hear that. Corn is good.
Absolutely. It could be uh, as good of a crop as we've ever had, but we'll need to have the weather comply in August. Hopefully, this heat that we're having as we talk today doesn't last too long.
Mhm.
When did you plant it?
The beans were planted in mid-April, and the corn was planted from about the 12th uh, through the 20th, just depending on which field we were in. About half the beans were planted from mid-May, and then we finished May 27th. So, uh, in the latest planted beans are already knee high or better. Most of them are loaded with pods at this point, all the beans that we planted. So they look really good. They have plenty of moisture right now. Again, we need a good August to be able to fill those pods.
Great to hear that, Matt. Matt, let's start with our discussion on the corn markets for fundamentals. What is your thoughts with the fundamentals of the corn markets?
The fundamentals are tight as far as the U.S. balance sheet goes. You've got, a 136 carry, for old crop, new crop, a 166. I believe it's 134 somewhere in there for old crop, and then new crop 166. Stocks to use on old crop under 9% typically would precipitate a very strong rally. New crop, we're relying on a 181 yield to get us to a 166. That tells us yield has to be good. So if we do get inclement weather in August, then the market should be somewhat reactive. However, good to excellent ratings on corn at 74%. That's the best we've seen since 2016. So about 10 years. We've got a really good crop in the field right now, and we're running out of time to herd it, so to speak. So, from a fundamental standpoint, you would think the market would be higher, but when you look at the new crop situation, most of your industry feels we're going to have enough bushels to get us through, and we're going to have a lot of bushels to deal with this year. The last thing fundamentally that's really kind of hurting the market is a huge safrinha crop for Brazil. That tells most of us that the new crop balance sheet has a lot of exports because we had a big export program this year. Maybe the USDA will have to trim those exports a little bit moving forward. But regardless, from a fundamental standpoint, this corn market looks pretty solid.
Are you consider that we have some lower prices for next month into the harvest season by end of September?
It's very concerning. My number one concern is producers who don't have enough storage for their crop. If they want to store it commercially, that's certainly a place they can go. But if they can't store it and they would like to sell some and get money during harvest, it's very likely basis will be very wide during the harvest, especially in those areas with a huge crop. So my biggest concern is those bushels that have to go to town. If they need the money for those bushels, I'd like to lock in a better basis before this thing gets too wide. And so I think that needs to be a high priority for growers is to figure out how much money they need this fall and try to get some of those bushels locked in before basis would widen or potentially see the market and basis move against them.
What do you recommend for these volatility in the corn markets?
The things I'm recommending are to stay flexible. I think that right now it looks pretty rough. And so, yes, a grower has to be concerned about basis. I also think looking forward to the 26 crop, the fertilizer to corn ratio, it does not look good. Fertilizer is very high versus the price of corn. And so, with last year having 90.6 million acres and this year having 95.2, I'm assuming that acreage will move back closer to 90 million acres. With such strong demand, there's a chance we could see this market's mentality shift in the next few months. So if I'm selling the corn, I like the idea of ownership through something simple, just like maybe some May calls or call spreads, which would typically be cheaper than the cost of commercial storage. So if they have to sell the bushels and can't store them anyway, they could still participate in a market rally if it were to occur.
Sure. The cattle markets is getting ramped up with the feeders. Does it take the cease to these prices in the feeders, Matt?
Uh, Feeders are strong as can be. Whenever you look at the chart, of course, we made a new all-time record high this week, just yesterday, and that would have been on Wednesday. We backed off a little bit on Thursday, but front month futures at 328.9 is a very strong number. The unfortunate reality for those buying is that you go all the way to October and you're still at 328.35. And so feeders are expensive and they don't look to get cheaper anytime soon. If you're selling feeders, that's great news. If you're buying them, it's a little concerning, especially when you look, at fat cattle prices. Now, one good thing about fat cattle prices, if you're buying feeders, is that you look at front month August futures at 225.8, and again, I mean, we're looking at record prices as of yesterday was an all-time record for fat cattle prices on the board. But you go all the way out to next April and you're still at 223. So this market is very strong and it looks to stay strong. Have to be cautious. The big money players are very long cattle market. And at some point, they may lose interest in staying long just due to the fact that they've already made a lot of money and they may choose to take those profits and exit the cattle market at some point simply due to the thought that they don't think they'll continue to run higher. I'm not bearish, but if I'm someone who's exposed to cattle moving lower, I would certainly protect myself.
Do you have any concerns about these prices in the feeder cattle for right now while we were seeing huge swing by end of the day?
You were down 260, but then yesterday we were up $2. And so essentially we gave back a little more than what we got on Wednesday, which was again an all-time record high. Would I be concerned with some sort of a reversal? Potentially. still above all moving averages as far as feeders are concerned. So at this point, this market looks like it's still got a very strong uptrend intact. And so it's pretty tough to be bearish, but at the same time, I'm very protective. If I'm someone who is wanting to sell feeders, I certainly want to do something to protect myself.
Pretty good to be a rancher, but the grains farmers.
Yeah, it's very good to be a rancher. As far as a grain farmer is concerned, it's not an easy time for growers. Input prices are sky high, while what they're selling or their output isn't worth a whole lot of money. So it's concerning that you could have record type yields, maybe in lots of places, but especially here in Central Illinois, and maybe not make any money this year. So it's we need all the bushels we can possibly get, but it may not be enough for us to make money. So it is a tough time.
True. What is your final thoughts about this crop in the field?
My final thoughts would be, as of right now, things look very good. We're still susceptible to weather. We can't forget last year, the month of August was on the dry bias, and it robbed a lot of bushels. The USDA forecasted a 183.4 crop, and they ended up over 4 bushels below that in January. And most of that, in my opinion, was due to the dry August. And I think the trade understands how important August weather is for especially soybeans, but corn as well. And so I want to keep some flexibility as a grower. At the same time, I got to be very much proactive on my marketing plan. Make sure I'm in my field scouting for diseases. Those of us that have potentially very large crops coming, tar spot, southern rust, anthracnose, they can all rob a lot of bushels. So I want to protect everything I can. And then if I do that, I need to at least protect myself with the markets as well.
Where people can find you for your consulting services for their grain marketing?
Yeah, it's just agmarket.net. If they go there on the web, they can get all of our resources from technology that we provide for growers to lock in profitability and identify different ways to manage risk. That all of our contact info is there, and then all of our research as well. So if they go to agmarket.net, they can learn how to get a hold of those tools.
Thanks to joining us.
Thanks for having me.
This is Matt Bennett from agmarkets.net. I am Cesar Delgado. I'm with Sue Martin from Ag and Investment and Angie Seltzer from Conus Ag. We're discussing with Sue about the grains and crop condition. I will be asking about the fundamentals from trade for Sue and Angie. Sue and Angie, how are you guys?
I'm good. Thank you.
I'm good, Cesar. Are we starting over?
Yeah.
Okay.
Sue, what is the fundamentals on the grains markets from crop condition in central Iowa?
Well, the crop conditions in Iowa are very, very good. Iowa was 87% good to excellent, up 1% for the past week. And of course, nicely higher than a year ago. Everything looks lush and green. Corn couldn't probably look any better. And soybeans look very good as well. And I suspect, it'll be interesting to see because everything looks so good. It's going to be interesting to see, do we really turn out as good as we're expecting?
How is the fundamentals with these grains markets with the weather suit?
Well, I think that when you look at for the month of July, with the rain we've had in July, the humidity, of course, there's getting to be more talk about white mold in beans and, tar spot in corn, just different diseases. But to be honest with you, for being in July and having these kind of conditions, it's naturally going to be leaning negative to the marketplace. So a lower close at the end of July shouldn't be a shock for the month. But I will say, when we look at soybeans, August is soybean month. The focus is turning on soy oil for future demand in the soybean arena. Rules have changed in that market and are expected to be positive or helpful to the U.S. farmer down the road. The soybean crush, of course, sharply higher than it was this time a year ago. And of course, bean prices are even higher than the last time in 2017-18 when we were going through the start of tariff talks with President Trump then. But I think with everything that's occurring, at some point, this is going to be a positive situation for the soybean prices. Processors are making money, and when they're profitable, they want to crush soybeans as much as they can. And of course, ethanol margins are pretty good as well. For producers to want to produce soybeans, we aren't going to be able to produce enough. We'll be importing probably soy oil by 13% more for this next year. And in the meantime, I think the soy oil demand just changes the rules of the soybean arena. Now, you have that kind of a demand and the need for crush. And then if you enter a weather market, that's really going to send this market running. But I also look at the fact that we have to keep in mind, we get focused on the soybean oil, but at soy meal, we've got to keep an eye on that because that production does increase by 4.5% according to USDA projections. And exports should increase by 7.5% because the more you have, the more you can export. But the ending stocks will still increase, even though our feed usage is expected to increase as well by 2.8%. Hog numbers are pretty good, and it looks like they're increasing. And that may have set the top in a hog market here for now. And that would be because of the extra numbers and the needed extra feed usage that we would have, not to mention for broilers and poultry. So I think the bean market is a market that has the potential to be a good bull market as we move down the road. But I agree with Angie. I think we move into August on a weaker note. And then we have to start realizing where we're at. Of course, you'll get that pro farmer tour and hear what they think out of the fields. But soybeans, August is soybean month. And the forecast is for actually going into cooler weather. The key will it be cool and wet? September is forecast by our weather forecasters to be cold and wet. That's not a good thing for harvest if that's the case, and especially for soybeans.
Do you have any final thoughts about this crop?
I would have to say the market or the crop looks really good. We have to keep in mind you have areas, Ohio, Tennessee, down into the Delta where they had the horrible winds and flooding early, and that crop was planted late, may not yield as good as everybody wants to think. And even in soybeans, the Delta beans aren't thought to be as good either. So, I do think there's issues out there, but then you look at the state of Nebraska and Iowa, Illinois, into northern Indiana. And I guess if we produce really good, we could make up for a lot of sins somewhere else.
For me, I agree a lot with what Sue has to say. I would say I am in one of those areas, though, where, in the state of Michigan here, our crop conditions, if you look at the amount of crop rated good to excellent year over year, we're down 17% here in Michigan, and the Eastern Corn Belt is kind of amongst that same level. And so I think we have to be really careful to get out over our skis with this expectation of these massive yields. I think we also, one of the things that no one's really talking about that has my attention more than anything is the fact that we had the second highest amount of unplanted corn acres as of June 16th over the last 6 years. And if you look at last year's time frame, we had about 3.3 million acres unplanted versus 3.6 million acres of corn unplanted this year. We lost 1 million acres into the FSA data. From the June 30th number to the FSA data, we lost 1 million acres of corn, simply that didn't get planted, whether it was abandoned, whether it just didn't work out because of field conditions or whatever. And if you look at the weather over the last 2 weeks of June this year, there were about half of the days, considered suitable for field work in the last half of June across a good portion of the Eastern Corn Belt versus a year ago. And so I would venture, one of the sleeper things that no one's really talking about, we're focusing on conditions and things like that. But, what if not only does yield surprise us by coming in at a record high, though not at the 187, 190 style records folks are talking about, more like the 181 to 183 that's currently kind of projected in this market structure. But we also lose 1 million acres plus of planted, because I would venture that not only was the weather less solid or not as good as what it was a year ago, farmer sentiment is far worse. Farmer availability to tap into cash is far worse this year versus a year ago. And so to me, I understand it looks great. I understand crop conditions. I see that it continues to rain and that rain makes grain. But I think we also have to recognize that rain is just one ingredient in what makes the crop. Rain is the equivalent of flour in a cake. Yes, you can't make a cake without rain, but you need all of these other factors. And so I'm a little nervous that we're way out over our skis on crop size. I think demand is solid. One of the things that, you see with fuel demand for crush, whether it's crush, soybean crush for biodiesel or ethanol grind, it doesn't really disappear once it's introduced into the market structure. And so I am not excited for the next couple of weeks, just because I feel like this market is going to remain, wrapped in negative sentiment. But I think we're going to have a pretty explosive end to the calendar